Hey everybody, welcome back to Trading a Smaller Account. Mike Fairborn sitting in for Barb Armstrong, who's out this week. A very well-deserved week out for Barb. And folks, good to be here with you. I wanted to take a look at some of the potential for a bounce today within the markets. We're seeing a little bit of follow through from last Friday's bounce, and still some of the valuations of the VIX are high enough where the premiums generally across the board are high. We'll definitely take a look at that, as well as some spread trades, maybe take advantage of a potential bounce higher, or whatever the case might be, even potentially a bounce lower. So with that, I look forward to getting going. Would like to welcome each of you here today. And as I mentioned, we do have, I believe we have Cameron. Yeah, we do. Cameron in the chat. Good to have Cam on board with us, folks. You can follow us both on X, Mike Fairborn CS, Cameron May CS. Got a lot of great info to take a look at there. Hello to you guys. Hello to you, Jay Richardson, Marcus, Carol. We've got, her name was Lola. I believe that's the old Lola, too. Not old Lola, but just Lola as it used to be Lola. We've got Jack and many others here. Great to have you folks. Any questions, comments, throw those in the chat so we can address those for you. And welcome. Happy Monday to a shortened market week. We definitely want to see what we could see what's out there, take advantage of any potential opportunities that you might see in the market. So with that, let's hit some disclosures to get going here. Now, options carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only. Let's see, certain requirements must be met to trade options through Schwab. Multi-leg option strategies will involve multiple transaction costs. So keep that in mind. The paper money software application is for educational purposes only, and investing does involve risk, including loss of principal. Now, rolling strategies can entail additional transaction costs, including multiple contract fees, which may impact any potential return. You're not responsible for all orders entered in your self-directed account. You are responsible for all orders entered in your self-directed account, and past performance is no guarantee of future results. And that is all we have in terms of what we're looking at there. So let's go ahead and take a look at a general market here. First of all, we'll look at Dell here momentarily, but there is the S&P 500 now. Now, just a quick note on general market perspective here. You can see that we did come down just below that 6,600 level on the SPX, but we did bounce and we came back. There was some good news that was announced last week in terms of economic numbers that might be good for the economy going forward. I'm talking about growth within jobs, potential for maybe we'll see what happens with inflation, but maybe some restraints on inflation as well. Folks, over here, draw this line. We came very close to the prior low over here. This is something I was talking about in one of my prior classes as well, is that sometimes when you get a low like this, kind of a double bottom, I don't want to say a double bottom yet, but just kind of a touch off the same point, sometimes, not every time, you might at least come up. Some traders will say, well, my expectation, you might at least come up to the top end of the range. That doesn't have to happen, obviously, but that is something that some traders will anticipate seeing. And if that's the case, there could still be some opportunities in there if you had a general market recovery amongst a number of stocks within the S&P 500 to at least hold within a range. Now, we don't know if that's going to happen or not, but that could unfold and perhaps a longer upward trend. Now, with this pullback, we did dip below a longer term moving average. You might have seen this one. I'm going to add a couple of these in here because a couple of these I would say were somewhat interesting as I pull them up right now. I mean, just in terms of what traders might look at, I think they're probably very commonly used. The 50 certainly is. We're just going to do a ×2 on that 50, and we'll put in the 100 in here, and we'll see what we've got. We'll change up some colors here a little bit. There we go. Okay. Let's put these guys on right there, and then you can see that. So I have seen markets pinball between the 50 and the 100 before. Like I said, the 50, multiply that by 100, and you're just about like right there. So one thing I would say is we did break below the 50, and you can see us right there, right? There's your 50 up on top. There's your 100 just below it right there. Possibility for a bounce, and sometimes you will get a bounce off those levels. And when you do get a bounce, it could pinball up to this point right where we're at, or it could break a little bit higher. There is a big bar in here, just to keep an eye on it. That's this, hard to miss. It's the biggest bar on the screen. Well, maybe there's one for second place or very close to it right here. but sometimes you'll hold within this range a little bit. It might take a little while before you're able to break out. That's kind of actually what we saw right over here too. So keep that in mind. That is a possibility. We could see something like that unfold, and we'll see what happens here. But just want to highlight those two. And there might be more conviction in the market, and traders might be more interested if we have a strong break above this level on, like I said, a shortened market week. Again, seasonality tells us this time of year. Just going to go to style real quick because it is of interest this time of year. November tends to be our strongest month of the year, tends to 5, 10, 15, 20 years. But we dipped in November. We kind of had a stronger October and September, which oftentimes is weaker. This is a 5-year perspective. But you can see over here, if we continue to rise up, that could be of interest for a year-end rally, maybe. Just want to throw that out there because it is a possibility this time of year if we snap back and start to get going higher. All right. Well, you guys, I got to tell you, I don't have Barb's account, her paper money account, to sign in to see what we've got there in terms of what she's been looking at. I do know that she did have a Google trade on. I think she might have, I don't know where she's at in those positions, but Google did hit, by the way, that is an all-time new high today. And as I looked into it today, because I wanted to bring this up, because I do chat for her in this class generally, but it's kind of just on that AI theme. They're evidently, markets considering them to be well positioned for the AI build out. But there you go on Google. A number of interesting actually flag patterns over here and kind of breakouts that we could see listed right in there. These are some that I'll look at too in the swing trade class I teach tomorrow. But this was one that we had eyes on. We got out, let's see, I want to say, I think it was a little bit earlier, but yeah, we're not still holding a position on Google. But anyways, it did have a nice run up, and you can see right there, those flag patterns can be pretty interesting, particularly when the trend is strong and breaking over long-term sort of levels of supported resistance. Now, I wanted to do this as we look at the VIX real quick. So I'm going to take a look at just some new example trades today. Got a couple of different things to look at on the VIX, right? Let me just highlight this. Over here, we were looking at this last week. These are prior highs on the VIX itself, and that can be, I found, support and resistance does tend to hold up in a lot of cases on the volatility index here. But, the thing is we're pulling down, and that can be an indication, that can be a positive in a sense that the markets are maybe bouncing, which we did see. So generally speaking, big pullback on the VIX. You'd see an inverse correlation on the S&P 500. There's your move to the upside here. The other thing is the VIX is dipped, and that can be, I'm going to do this. I'm going to say a small negative here. You're not getting quite the premium in those options. But I will say this, to kind of offset that small minus, because we did dip, you're actually getting another positive in here, and in the fact that we're a lot higher here too. I mean, we're above 20. We're at 21 roughly right now. And so all else equal, that could be a very interesting time for us to continue to maybe look for a strong trend and at least look possibly at maybe some short put verticals out there on some of the bounces out there in the market. But I have to tell you, although the NASDAQ is recovering and is doing actually quite well, I'll just highlight this right here. I posted this just this morning. The semiconductors are what's bouncing back in the NASDAQ right there. I put out the current performers, and you can see just the semiconductors have really been quite strong through here. You've got semiconductor equipment as well, and that LRCX, just as an example of what's been performing on the day. So a pretty sharp bounce back. You got ADM there at the bottom, and then just a couple of others in there. But mainly, it's a semiconductor bounce. I'll post this in here if you guys want to take a look at that. It's just on that X handle there. Let's pull this back. Let's pull this up. And so we can keep a look. We can take a look at some of those. Like the biggest performer there was AVGO in terms of a bounce back. Now you'll notice that it didn't dip as much. Let me kill those moving averages too, just while we've got them. Okay, so there's the move there on Broadcom. Really the best performer, wasn't it? I think it was. Yeah, best performer. Yeah, AVGO. was our best performer in the group, followed by Micron, Tesla, not a semiconductor, but I still wanted to look at Tesla today. There is a bounce right there. Now, the thing we would kind of want to look at in terms of the trend, take a look at this. Are prices going higher? Is the trend up? Well, I have to tell you, that is a higher high right there. That's a high, higher high, trying to build on strength, but yet still use a short put vertical, a spread trade here to take advantage of a move up or a sideways move. I want to point your attention to the earnings. We still have earnings out here, and that's going to be before our monthly contract expires over here in December. So keep a watch on that. This one, you got to be mindful of earnings. We're very, very close here to resistance and resistance. So I'm going to pause on this. I'm just going to kind of wait to see what happens here. Maybe earnings. I mean, it could be a big move. You'd have to say that earnings have been okay over here, and okay over here. Actually, looking at last December, but in terms of performers, yeah, we still have that one to announce. Micron, very similar. You're going to see this with a few of these over here. Okay, AMD. We did announce on AMD, and there's a little bit of a bounce there. You're holding at a support level here on AMD. I wanted to just bring this one up really quickly because look right down here. 200, that's a big, big number. Sometimes if you get above those levels, which we gapped, sizable gap right there, to right there on AMD. Can tell you exactly what the news was. You could always come down here and look at the news right there if you wanted to, just to confirm. But the market liked that event, that news, and we came right down to it. We hammered there, and now we're getting a little bit of a follow through. Now, you guys are good in this class because I do the chat oftentimes, but what candle pattern is this as well at a prior gap level, which is also kind of the double century mark, right? You got the 200 there. What candle pattern is that thus far? Now, the day's not over. Well, I've got to highlight that point because that could change. This is a pattern that I have seen form off bottoms. There's another one right there. Very, very similar to it. You got that right. It's a culmination. It's built of three candles, but Jay Rich has got the right one right there. The hammer's a key point. That's the middle one. But when you put them all together, there's another one too. But I'm glad you pointed out the hammer there because you're absolutely right. The hammer's key. And by the way, it did hammer right at that 200. This slipped in at the very bottom one, did it not? Hang on. Yeah, AMD slipped in like in 10th place there. Morningstar, exactly. Morningstar. Yes, you got it. Yep. Which it could be, by the way, the start of the move, Zach. It could be. So we don't know how it will end. Some traders might want to wait to the end of the day. But when prices have dipped like this, the thing you got to remember is what happens to the value of those puts. When prices decline, put values. The delta, right? The delta would go up. When we're talking about the delta, since I did bring it up right there, I need to bring up this point real quick. Let's pull this up. This is a good time to go into this right now. Gosh, these spreads are just, for $200 stock, you get a dime wide. It's already at 20 million, God, not 20,000, 20 million shares with some really interesting open interest over here. Again, though, I did bring up the delta. Remember, a $1 increase in the underlying stock itself, a $1, folks, increase will move the stock up or down based upon the amount of the delta. So you can see over here, well, the delta has been going up in value, right? As prices have been going down. Look at the delta right there. You can see it. The delta has an influence on this big time. But I just wanted to explain, what's going on with the delta, just generally speaking. It's tied to a dollar move on the underlying stock itself. Just to recap that, a $1 change in the underlying stock will impact the value of the option price. We can see that right there. Look at the prices go down, just a $1 change, and there you got it. So these are really good spreads through here. You'd have to say I'll just say this. Some of these are a dime wide on a $200 stock. A lot of times you can drive a truck through these. Sometimes they could be, even for stocks that are heavily traded, $1 widespread. I've seen $2 spreads, honestly, and those aren't great. But look over here, open interest in the thousands and the tens of thousands range. Now, bringing up that delta, what I wanted to point out here for you is that it also represents an expectation. And we talk about this pretty frequently. A lot of traders will look at a 0.20 to a 0.4 for selling options. Okay, 0.2 to 0.4, and they just say there's an expectation of 30% of it going down. In other words, that's not too high. And that's just a totally separate number, has nothing to do with the chart. We looked at additional indications on the chart that could potentially increase the expectation for it to hold above a 200, according to the way that some traders would look at it. But that's what they would look at, maybe just a 30%. Does that make sense? So the delta just represents the change in the underlying option. The option will move up or down, roughly that range, 30 cents, based upon a dollar move on the underlying stock. And clearly one of the biggest by far, if not in the majority, in a lot of cases, you just have to say the biggest mover of all the option Greeks right there. We have other classes that teach that in a little bit more detail, but wanted to throw that out there as I've seen it. Okay. All right. So there we have it. If we look at that 200, so it's a 30. It's right between the 20 and the 40 range, right? We're right between there. Just went to 29. It's a little bit lower than it was before. But watch this. If we were to sell this guy, what is this doing over here on the chart? I just want to highlight this for people that are kind of getting familiar with this. And we're continuing to rise up a little bit here. But if we were to sell this right here, if we're selling this put, I'm just going to have a minus P there, and we buy a put below it. Generally, what traders are looking for, and this is what would occur in, the majority of cases, if the prices can go up or even go down a little bit. Ooh, we'll use some colors. I've got the 3 colors here. Or we could go sideways, right? But we're holding above 200. The traders might have an expectation that, hey, we're just going to collect that premium at the end. And that's what the goal of this would be. So you notice it can go up as much as it wants. It can go sideways as much as it wants, or down to maybe roughly very close to that 200. And they can still capture above that 200 the full premium. Now, short options can be assigned at any time. It's important to note that. But generally, if you're holding above that level, the trader's expectation is that it will just expire at expiration. Now, of course, the closer you are to it, and clearly if you are below it, then you can get assigned that option contract. So you want to be mindful of that as well. You'd be purchasing, for example, if we sold at 200, you'd be buying at 200. And that's generally the case, true. Clearly, if you're below that 200 level by expiration, generally that's what will happen. So that's what we're looking for here. And this is always such a fun way to just explore this. Look at this. If I click here, and let's just go for that 680, fine. If I just look and just sell the put itself. Okay, what are we looking at here? Just by selling the put only at that level, we got a max loss, folks, of just over $19,000. Because remember, if we close below that level, that 200, generally, what would happen? Vast majority of cases, we're buying 100 shares of stock. Now, if AMD goes to 0, which traders might not anticipate it happening, particularly in the next 25 days, but that still would be the loss if it were to go all the way to 0. And obviously, there's a wide range between where we're at now and 0, too. So if it had a big dip, we could be on the hook dollar for dollar as prices are dropping. And look at that buying power effect, 2,800 and change, right, just for a single contract. Now, but if we look at that, and by the way, last thing, $680, right? That's what okay, 675, the bid just dipped a little bit, $675. But if we were just to go here and sell the next one lower than the 197.50 right here, okay, it's a 72-cent credit, but even if I were to ramp this up, let's just say to 5, click on confirm and send, I'm not quite to my credit level yet. Not quite there. I'm at 360, but there's only $890 risk on something like this. Now that mirrors the buying power effect as it stands right now, the margin requirement, as you can see, but it's a lot less risk relative to the credit being received. Now, some traders, they'll even do this. They'll adjust this and they'll just say, well, there's that 97.50. What does the 195 look like in terms of what we're buying? Okay, the credit's 142. Let's just see how close we can get to our number here. Oh, I'm going to rent. Fives maybe. What was that putting us at, by the way? It's actually a higher credit. I'm going to knock this down just one here. There we go. And just kind of explore this and what we're getting. So some massive reduction still. So we're pretty close to that 670, not quite. I mean, there's a little bit more. Obviously, we could certainly gain in that. But just by doing four options, multiple option contracts, the buying power effect is about half. You're closer to the credit. This is about half and a substantial difference on that max loss. So just a few things to look at there as we set this up. Now, I'm not going to shoot for that full credit amount. That's not necessarily, I just want to make a comparison. I'm just simply going to do, folks, a couple of these contracts right there. Let's keep the credit at 280. That drops down the buying power effect margin requirement to 750 and the max loss, 720 and the max loss to 720 as well as it stands. Okay. I'm just going to do these two. You can keep these as close as you want to limit that risk, but we'll just reduce the number of contracts to 2 in this case. Of course, you could always go to a tighter spread if you wanted to. That was just a 5 wide right there. But it is kind of nice that we've got this additional spread there. It looks like prices are actually shooting up. So we just barely got in. It moved quite a bit. I mean, we were at the 675, and I think, oh, I'm sorry. I was looking at this level. It's holding to roughly about the same. There you go. Okay. So yeah, and just as Cam had mentioned there, the Delta can tell a trader a couple of things. How much their option may rise or fall on the value of a $1 move on the stock, and the approximate percent likelihood of that contract or expectation, exactly. So piecing those two together, succinctly right there, you got it. All right. Yeah, the chat, I think we're pretty good. Let's see. All right, let's continue on. So that is kind of our semiconductor setup today on that recovery, that bounce. This one was a little bit interesting. You could say possibly from a technical perspective based upon what we talked about. Clearly an upward trend. And what was it, folks? The big thing that was kind of keeping us out of those other ones, what would happen over earnings? We're past that earnings now and we're clear here. So let's continue on. Now, another one outside of this group, thinking of the retail recovery to the end of the year, Amazon. Okay. Not quite a morning star, but something kind of interesting. We're not quite down to our 200 level, although we did hold that over here on Amazon. But we've got another company here that could have its past earnings. The market responded nicely to that. It did sell off with a regular earnings decline, though. Clear to see that. But notice down here, too. Prior high. Low, low, and we just held barely above that point as well. So there could be an indication of some support that's residing right through here, right? And a support bounce on Amazon. Now think year-end rally into the year, and Amazon, we're going to step back and take a look at something interesting here. What if we did seasonality on Amazon itself? Just to confirm what happens maybe towards the end of the year. How does Amazon do over the past 5 years? Well, there tends to be a little bit of a trajectory to rally to the end of the year. People might be buying gifts. I'll tell you what, I think a lot of people do shop there, right, on Amazon. It might be. It's a big retail outlet, although I think the majority of their money is made in, AWS. I think it's something totally different. But anyhow, could influence it. It tends to run to the end of the year. And what if we were looking at the chart and we saw this? Well, shoot, there's some highs, touch again and again and again. Even if we rallied up here for our maybe December expiration time frame, that monthly December contract, maybe there's, maybe we're not so bullish on the long side because there is resistance here, right? So in other words, we might see a heavy level of resistance before we were to let's say, rally on up through this and really extend higher? It might, but it might not. It might just kind of slow down in here, where selling those option contracts could really help us. With the VIX being high is one thing. Higher, it's in the 20s, could be influencing this. And what's been happening to those put prices? Think about the premium on the put, and to some degree, it could influence, the put premiums too. If you get a series of sell-offs over and over, sometimes the volatility on that can smack that higher, and or the premiums are higher too. So there could be some positives here in terms of a higher premium, which could allow us to sell options further down the chain a little bit lower and still get a higher premium. So we might have a larger buffer zone where we're selling, right? So instead of selling up in this range, we could maybe sell even at or below this resistance level, because the premiums could be higher, maybe selling in through here and even getting a higher premium like it would have normally. We'd have to be at a higher strike price to get that. You guys with me on that? Higher premium could influence something like that. So let's go over to our trade tab and let's take a look at our month. A quick note I forgot to mention at the beginning, and that is that's 25 days. And a lot of traders will look. We're getting close to the bottom end of that range where a lot of traders will look. 20 to 50 days. Notice over here, if somebody was so inclined, we're just above this level down here with our Jan. That's 53 days. I'm just choosing this front month contract. We've had a lot of volatility in this group, and we might be able to keep it kind of short, like I said, with shorter term time frame, with that additional volatility in the market, potential premium as well. So what do we have over here? Well, first of all, there is the 200. It's a ways down there. How are we doing on our options? Wow. So real close to what we saw in AMD. We've got 20 million, about 19 million shares traded right now on Amazon. Can have a solid impact on the spread. This one's even crazier. That's a 2-cent spread, folks. Okay, 3. It just moved to a 3. But you catch my drift. It's such an incredible spread right there for a $200 stock. Like I said, volume can really influence that on the stock. And of course, over here, open interest, everything that I'm saying right here, at least in this range where we might be interested in selling some options in the tens of thousands. So a really neat thing to see over here and really having a key influence. It looks like they just added in over the weekend, and I've seen this. They've added in a couple of different, it being the front month option now. And so the November's gone now, right? We just had that expiration. And so they'll fill this in, and we can look at those too. It looks like the spreads here aren't as great, but they're still really good. I mean, that's a 5-cent spread. I can't say that that's not really great, because that is pretty amazing, even better than AMD. But let's look at some of the deltas over here as we compare this level. That's a 110. That's where the support was at, right? That we'd seen. It's actually a little bit above there. So even if prices were to dip, maybe there's a tendency to bounce off that 110. We don't know, but it could act as support. There's your 110. You're at the very bottom rung. There is your 21 expectation, using that, again, that delta as an expectation. So some would say, hey, my expectation, 20%, that they think it's going to go down in that level. So, and that doesn't include the trend. It doesn't include that key support level. It doesn't include the possible year-end rally or anything. But you see what we're doing. We're taking it further on down the chain and still trying to collect a greater premium, because maybe those put prices and just the premiums are a bit higher. Where was I? There it is, 210 right there. Let's just do this again. So the 210, which has open interest of 18,000, really quite high. What do we have for that? So we get 268 is our total credit as it stands, as you can see right here, just on the order dialog confirmation. Always been mindful of commissions, as we've discussed, though. But yeah, we're just looking at a single contract here. The short put itself, 3,000, right? The max loss in terms of a margin requirement, a little over 3,000 as it stands right now. Max loss in the 20s. And yeah, that makes sense because we're in the 200 range. If I come over here and I edit this guy, though, and let's just do this. I'm going to hold the control button down on the keyboard. I'm going to choose another Well, we can either do, let's do both. Let's look at each of these and just make a quick comparison. So there's the 207.5, 43 cents. So we'd roughly have to get um, five, maybe a five credit, excuse me, five contracts to push this up to generally that same credit level. That might not be our goal. I'm just going to try to make it comparable on the credit side. Look at that, 207. It's like it's, I'm not going to say quite a tenth, but it's getting in that range of what we were looking at before. Let's just hit a few of these on here. There's four contracts. Put this guy up. Okay, so now, we were at 265. The credit here is about 172. So still less than half of what we're looking at, right? Yeah, what was that? I gotta make sure. Giving you guys right now 3,000. So a lot less. For some reason I was thinking two. 3,000. So let's go ahead and just click on this again as a buy. I'm gonna ramp it up to 5 just to kind of show you. Okay, so now we are getting close to a comparable. I guess one more would do it. Like I said, 5 was roughly there. That's about a $215 credit. And there you go. It's only right now the margin requirement's 1,000, and so too is the max loss. So you can see what we're doing there. Like I said, this spread's 3 cents. So this is just incredible. 3 and 3. We'll go ahead and do the shorter spread, the shorter leg spread. We'll use the 207.5 or a 2.5 spread between the two on this example. Okay. Could do the 205. It's going to increase the potential risk per contract. But I just went ahead and ramped it up this way. This one seems a little bit more flexible to us in terms of, well, a few things maybe factoring in on this one relative to the AMD and margin requirements here. Having a big impact if we're just selling that. So just a quick visual. There's your 210 down here. We've got the 25 days out here outstanding. And our expectation is that maybe we can at least rally up, maybe do a point over here. We don't necessarily need to take it all, look for the entire amount, but there is the 25 days. I'm going to try to put that line, just eyeballing it, folks, but it's somewhere over here. And maybe it can go sideways or flat through here, but we're all the way down at the 210 for the short put. The 207.50 was our long put. 207, since it's not showing it here on the side, 207.50 for the long put. Short put 210, there you go. And again, what does that give us in terms of a characteristic here? Well, it's above that key support level, which might act at, at the historical support level. Will it be key? That remains to be seen, but interesting. Okay, let me just go ahead and put this guy through right now. Left it open, we'll send this through, and there we have it. That tight spread really helps to get that through, but that's incredible, that spread there. Hey, let's do this. Let's step outside of our normal, like, hey, I was going to look at Tesla and Dell and a few things, but just for fun, what else out there could be interesting in terms of year end? How about Best Buy? Another retailer, a little bit smaller. We've got the stores, but we've got dollar-wide legs over here. And the spreads here are okay. They're not as great. We only have 2 million shares traded, but we're in the hundreds here. That's sometimes the limit for the open interest that you'll see on some of these. And we've had several, wow. It was a 2.5 wide. You can see that they filled these in with some additional legs in here. Check it out. So it was a 70, a 27.50, a 75, and now you've got the 73, 74, 71, 72 listed in there that is starting to fill up. But come over here. Let's look at this Best Buy. Okay, how about the trend? Higher highs, higher lows? Yes. How is this doing seasonally speaking? End of the year? Oh, well, the last 5 years hasn't been great, actually. It's been going down. Now, this doesn't happen every year, but it has been going down. That's interesting. Totally different from Amazon, but it's been dipping a little bit. Got to do this. I got to say this. I was not expecting that, but I just wanted to do just a quick review of this one too. Wasn't expecting that. What will happen here? Trend's up, but I have to say that the historical trend of seasonality was also up. That's a higher high, higher low, and it dipped. Let me do a quick deep dive. I'm going to go into appearance And I'm going to take a look at just what happened yearly plus the average and see if we just had one that just got killed. I have to say that it looks like 2021 was the death year that really was so deep that it threw everything off. Because look at this. So you've got like this year that was strong, this year rally, but these actually two were kind of flat and down. So, okay. You had to actually basically kind of sideways, two up, and then one massive down. That's what's influencing that seasonal behavior there. Okay. So I bounce back to it. I'm just going to throw this one out there because earnings is in fact coming up. So I'm not going to put a trade on, but this is one that traders could look at for a possible trade. If they get past earnings and let's say good news is announced or something and the market responds to it, maybe it has a little bit of a gap. And then maybe it's set for this trend to continue. But we're going to go ahead and just say on that earnings, let's just wait and see what happens. Just as an example in this case, and see how it unfolds there. Because maybe that might be better getting past earnings and just waiting for seasonality as well. Folks, if you're finding this discussion helpful, smash that like button. It lets me know that you guys are finding it informative and useful. That's the whole goal. We still got to look at a couple more of these, and we're going to do that real quick. Before I do that, though, just wanted to highlight as well that I do a number of trades like this, where we're looking at a pullback here with oftentimes a close above the high of the low day is what we're looking for on some of these flag patterns. Apple did a good job of this. Like you're looking at a flag pattern, and then you're getting like a hold right there, right? This is one that we traded quite a bit in the swing trade class. Sorry, it was one more up. Apologize for that. It's actually that bar where you're closing above the high of the low day in the form of a flag pattern formation. If you guys would like to see a script on that, I did create one on Friday in the ThinkScript class if that's of interest to you. And by the way, definitely consider subscribing to our Trader Talk channel. Love to have you on board there. I'm just on playlists right here. If you find that helpful, because we do in that class, in that swing trade class, quite a few of those spread trades, or just even some just directional, stock paper trades as well. But that can be helpful. Created this over here. It was just a new code that I'd put in to Thinkorswim, and is building a flag pattern finder with early breakout sign potential. So I'll go ahead and throw this in the link. There are others in here that you guys might find helpful. I'll put this in, and I do share that code in this class, just as a side note for you. But there it is right there. There's the class, and it will, I go through the details of it in the class and explain how to do it, but I think it works, it could work well. It could work well with this class, particularly on spreads, because we're looking for trading a smaller account, but you're still trying to get, right, that trend in place, the higher highs and higher lows. You want to try to build, anytime you can do it, you want to kind of, if you're looking for bullish, a lot of traders will want to get that trend on their side, the probabilities of the trend. And then on this one, we added the price pattern to it. So that script has trend, price pattern, and then the hold, which is what a lot of traders will wait for the confirmation of the start of the move. So if you guys are into that, built that there. Next trade right here. How about, we mentioned it, and it was actually on our list over there too, that I sent out on X, right? The X post, and that is Tesla. Now this might be getting us a close above the high of the low day right here. Just so you know, if this is our low day, I don't think we closed above it until today. And by the way, we haven't closed above it yet. I got to throw that in there. Maybe there's some potential to close above it, but I got to say, there was a few different fake outs, and that's what traders will wait for, and that's what can be so important at the end of that flag or whatever pattern you're looking for, or the possible bounce off a prior support level, or in this case, getting close. It's actually right at 400. But this low, did we close above the high of that low? Folks, we did not. We came dang close. This day, tested above it intraday, but today, maybe our best shot. I got to put a giant question mark there because we have not done it yet. But I'll tell you what, in this class, there's a shortened window, so we've got to just throw it in. I'll show you the last one too. Let's put a trade on Tesla And then one more stock we can just look at, but we're getting close to our time here. So Tesla, okay, 400. You know what's interesting? Selling those puts at least below the last low, giving ourselves a little bit of a buffer zone where prices can still, because right, a lot of times traders, like we said, they're saying, hey, even prices can go down might be their expectations. There's a high likelihood, obviously, of getting called if you're, getting shares put to you if you are below the strike price, but you get that down feature in there too, right? That they might be looking for. Sideways as much as you want. And lastly, to the upside, right? All three of those can work on a short put to collect the max gain. It's what they're looking for, traders holding above that level. So what was that level? Gosh, 375 is even quite a range from there. Let's just look at that 375 and see what we've got. Spreads are okay. 53 million shares. Now we're double the 200 range. We're in the 400 range right there. But right there, 375, we're going to go that low? We sure can. The deltas are still in the 30s. So I've got to max this guy out. Let's get a little bit more in here, and we'll finish up on that right there. Where are you? 375. Okay, so down here, look at that. Spot on R20. Isn't that fascinating? We did that twice at long-term support, and it was right at that expectation of a 20%. It's quite low, but like I said, are we getting help with option premiums being up? Perhaps we are. All else equal, right? The VIX is higher, so keep that in mind. You'd have to go back and study it yourself to really see if it's actually higher, but we have a few things that could be leaning in that direction for us. But there is the 375. Now, the 380 is still below that level, but I'm going to hit that point, round number right there. Well, 375, right there. Okay? I'm going to go ahead and just hit the control, and we'll click on this right here. It's a little bit more expensive in the 300 range. There is the credit. Let's just look at a couple of these contracts right here. We'll pull it up. Okay. Max loss 806. That matches our margin requirement for a $194 max gain at expiration, with the things we looked at to perhaps influence that expectation that we can at least hold above that 375 strike price, right? Because we can make it down a little bit, sideways, or up on a trade like this. Okay, I'll go ahead and send that through. All right, everybody. Well, great being with you here. Always fun to sit in for Barb. Thank you, Cam, very much for your help in the chat. Folks, great to be here with you ahead of a short market week. I wish you all a fantastic and a happy, got to say happy Thanksgiving, within there this week. But yeah, some interesting potential out there with the VIX being as high as it still is, right, for selling some of these trades. Particularly, we talked today about those spread trades, folks. Again, if you're getting value out of these presentations, we'd love to hear about it. Just smash that like button. It's the easiest way in the world to let me know, too, that you're finding it useful. And all right, on that note, yeah. Oh, let me just make sure you guys have that, because I didn't put the title next to it, but that is that flag script class. And just a quick note, because I had to bring this up. Think scripts aren't guaranteed for timeliness or accuracy. I didn't share one in that in the class here, but that is that script link I put in if you're interested. Okay, want to make sure you had something fun to look at over the weekend as well. All right, everybody, take care. Have a fantastic rest of the day as well. See ya.